Hello, this is Jake Sanders for Wealthy and P's Market Minute. Hope that you had a great week. And if you were on spring break, perhaps that you had some good time with family and friends. Last week, in regards to the markets, we saw a decline in all three of the major indexes. Now, this is driven largely by the continuation of the hawkish tone that the Fed is taking around inflation and interest rate hikes. And it's also exasperated a little bit by the war in Ukraine and the subsequent supply chain issues that have been created as a result of that. And in general, just inflation fears about the future. Now, we've been talking a lot, at the risk of beating a dead horse, about inflation and interest rate hikes. And I want to address that a little bit more here today. You'll see that real time inflation on the core level is 6.5% roughly. This is as of the end of February. Total inflation is pushing 8%. Real time, I suspect that's going to be even higher when the next report's published. Now, what does that mean? Pragmatically, if you're somebody who's been thinking about refinancing your home or perhaps sitting on an adjustable rate mortgage, HELOC perhaps, now would be a good time to act on that. Inflation has driven mortgage rates higher, but you can still get a good 30-year rate in the fours, which is higher than it has been. But in regards to historical context, it's still a pretty good rate. Secondly, what does that mean for equities? What does that mean in regards to the stock market, your portfolio? Well, perhaps now more than it has been in a long time, we believe that asset allocation really matters. In other words, gone are the days, at least today, of just throwing a dart against a board and seeing an equity position go up regardless of where it is. If you have questions about how we're handling that here at Wealthy and P, want to just talk or have other questions about anything else, we'd love to hear from you. You can find us at wealthyp.com. Thanks, and hope you have a great week.